Welcome my dear students. In this video, in this class we discuss the merits and demerits of management accounting, tools and techniques. Okay, and actually ask the students. Welcome my dear students. In this video, okay, number of students are not attending this class. Already I told you it is a compulsory to attend the live class. Actually ask the students, I am very sorry for the due to some problem, technical problem, the class was not started in time. Okay, now I start the class. You are taking not seriously. Only 3 students are attending out of 20 students. It is very bad situation. Otherwise, I can stop this class to continue. Please join that class. Otherwise, you take the admission back. No problem. If you are taking this, if you are not taking serious, I suggest the students to take the admission back. No problem. It is a compulsory for PG students to attend the live class from our government postgraduate college Jaipur. Okay, now discuss the merits and demerits of management accounting, tools and techniques. Okay, in this class we discuss the merits and demerits of management accounting, tools and techniques. Okay, now discuss what are the merits of management accounting subject. First one is the planning. The management accounting subject helps the management to do the plan in a proper way. Means how the work, means how the financial statement will be helpful for the management. Means when, where, how much, the amount will be invested. It helps the management in how to invest, when to invest, or where to invest. Okay, for all these questions will be helpful to the management to make a plan properly. When the management wants to make a plan in a financial term for a financial matter, the management accounting will help the management. When the management wants to take a decision on purchasing another business, on that situation, first how to compare the last year profit, last year turnover. If the turnover of the last year is very good, the business can expand. The turnover profit of the last year is not so good, automatically the business has to leave. The business has to leave that decision to expand its business, to open the new branches, to launch the new product in the market. That's why the management accounting helps the management to make a plan properly. Next one, controlling. Controlling means when you get all the information, there are different branches in an organization. It is not possible to managers, to the board of directors or shareholders to control all organization, to control all branches simultaneously at the same time. But the management accounting helps the management to control all activities, to control all branches in the organization. It helps the management how to control all activities. Take one example. In a Tata company, the Tata company is doing the number of business activities, means manufacturing the bike, manufacturing the car, manufacturing the steel, manufacturing the watch, manufacturing the clothes. The Tata company is engaged in the manufacturing of different material, the different products, different services. The company is engaged in different services. The controlling all branches, the controlling all activities, the controlling all product, controlling all branches. It is not a this is not a very simple. This is not a very easy. But the management accounting helps the Tata company how to control it. By taking one example, you can understand easily controlling. There are three branches, A branch, B branch and C branch. Out of three branches, one branch is not working. Other remaining two branches are working good. On that situation, the management accounting means the information of all three branches gives the information. Which branch is operating good? Which branch is working good? Means the information of all three branches show which branch is working good. Means A branch or B branch or C branch. Which branch is not working good and means such branch can be controlled by the department, by the organization. Means the controlling all activities of the management accounting, all activities of organization, it is possible by supplying of means the supplement of the information of the management accounting. Next one, better service to customer. Better service to the customer. When the organization is engaged in a different manufacturing of the products, is engaged in manufacturing of different products, which product is better to the customer? A product or B product or C product? Means from which product the customer is not satisfied. By observing all the information, the customer satisfaction survey, by conducting the customer survey, automatically you can identify to give the better service to the customer. Generally, when you go to the supermarket, there is one information. Okay? there are 5 stars, good service or bad service or better service or best service. If we press the best service, automatically the company can organize, the company can understand, okay, what you are selling the product, it is satisfied by the customer. If the customers are not satisfied, if the customers are not satisfied with that particular product or particular services, under circumstances, on that situation, the company can reorganize, the company can take the action against that branch. I give another one example. In Play Store, when you are downloading the particular software, in downloading the particular software, you can give the comment how the product is good. You can write your comment of the particular product in Play Store when you are downloading the apps. And also in YouTube channel, means also I give the one live video to know you. You also give the what are the contents. You will give the comment of this video. You will give the comment of this class. It is means it helps me how to make a better video to you online live class. Means the management accounting, it helps the management to give the better service to the customer. Next one, organizing. Organizing means it coordinates, it organizing all activities in one term, in one paper. You take one example. Now you have the marks card. In a marks card, all subjects are organized into one paper, one single paper. For which subjects have scored more, for which subjects have got the less marks, you can identify easily in one paper, in a piece of paper. Means that is the organization of all subjects into one paper. And take another one example in marketing. When you are appointed as sales manager, the number of sales executive, the number of sales representative are working under you. There are 100 sales representative under you. How can you identify the sales representative is doing work or not properly or not? Means by preparing all the information of all 100 sales representative in one paper. Well, means what is the sales performance of A, what is the sales performance of B, what is the sales performance of C, up to 100 sales representative, the sales performance information gathered into one piece of paper. When you have gathered all information of all 100 sales representative in one paper, automatically you can come to the conclusion from which sales representative you can get the more benefit. Whose sales representative is doing the less performance, you can take the action against him. That's why the management accounting helps the management to organize all activities on a piece of paper in a less number of papers. Next one, communication. The management accounting provides the communication to all users of financial information. Take one example. Creditors gets the information from organization in the term of creditors velocity ratio or a debtors velocity ratio. The shareholders gets information by calculating the return on investment ratio, return on capital investment ratio. Means it communicates between the users and organization. It communicates between users and organization of the company. Next one, improving efficiency. If the performance of a particular branch or particular person or particular office is less, means we can improve that particular product. you can improve the particular branch, you can improve the particular person by doing something better service to them. Okay, it helps the management to improve the efficiency. Next one, motivation. When you prepare the information, all branches, which branch is doing the better, which branch is doing the best, automatically it motivates the remaining all branches. Means the 20 students receive the result from university. Which students have got the more marks, automatically the ranker student motivates the remaining all students. Okay, everybody should have got the more percentage. Means when it is possible, when you get the information in one mark sheet, in a result sheet, then it will be possible. Okay, that's why the merits of management accounting, this is also one of the motivation is also one of the management accounting. Next one, demerits of management accounting. What are the demerits of management accounting? Based on financial and cost records. Actually, the management accounting is based on financial only and only cost records. This is also one of the demerit. Next one, personal bias. Generally, already I told you, the management accounting information is prepared as per the requirement. The information is prepared as per the requirement of the management. Means there is a chance to manipulate the records. To manipulate the means to change the records as per the requirement. Actually, the profit is less, the profit can be increased in preparation of the financial statement, in preparation of the management information system. Okay, that's why the management accounting is a personal bias, because the records can be changed, the information can be changed. Next one, lack of knowledge. It is not very easy to prepare the information. Already I told you, there is no, means it is not so easy to prepare the information. It requires the professional skills. In the calculation of the budgetary control, you should have the knowledge on how to calculate the net present value, how to calculate the internal rate of return, how to calculate the payback period, how to prepare the fund flow statement, how to prepare the cash flow statement, and how to calculate the ratio. Means it requires the lot of knowledge in management accounting. Means the normal person cannot, means it's not possible to adapt to the management accounting subject. Next one, based on decision making. It is not constant. The management accounting is not constant. For every year, for every month, the statements are not prepared, the financial statements are not prepared. When the management wants to make a decision on that situation, the management can prepare the information. When the management wants to take the decision on that situation, the management information can be prepared. This is also one of the demerit, additional work. This is a additional work. Already in the organization, workers are engaged in manufacturing products, workers are engaged in the preparation of financial statement, workers are already engaged in the preparation of a cost sheet, cost accounting. Except these works, the preparation of the management information, this is additional work to the organization. Calculating ratio, preparing profit flow statement, preparing cash flow statement. This is an additional work to the management. This is additional work to the organization. This is also one of the demerit of the management accounting subject. Next one, already I told you, there is no particular principle, there is no particular rule. Calculation of the debtors turnover ratio is different from one organization to another organization. Calculation of the capital turnover ratio is also different from one organization to another organization. And prepare the income statement, prepare the common size statement, preparing the fund flow statement, cash flow statement is different from one organization to another organization. There is no particular way, there is no particular principle to prepare the financial statement, prepare the information records. Okay, that's why there is no particular principle, there is no particular rule. But in financial accounting, there are different principles, there are different rules to debit and credit. There are different principles, there are different standards. You have to apply it. But in case of the management accounting, there is no particular rule, there is no particular principle. Last one, this is only two. Main, when the management wants to take the decision, on that situation, the management accounting is applied. On that situation, the management accounting is used. Means it is only two. Means it is only the help. By taking some information, the management can take the decision. Generally, these are the demerits of the management accounting. What are the demerits of management accounting? Based on financial and cost records, personal bias, lack of knowledge, based on decision making, additional work, no principle and no rule, and only two. Okay, these are the demerits of management accounting. Next one, what are the tools or what are the techniques of management accounting? Generally, the tools or techniques of management accounting. First one, based on financial accounting information. Second one, based on cost accounting information. Third one, based on mathematics. Third and fourth one, based on miscellaneous tools. Okay, generally, there are 4 tools or 4 techniques. First one, based on financial accounting information, based on cost accounting information. Third one, based on mathematics. Fourth one is based on miscellaneous tools. Okay, now discuss the one by one. First one, based on financial accounting information. What are the techniques and what are the tools in management accounting? First one, financial statement analysis. There are also different tools or techniques in the financial statement analysis. Common size income statement, common size balance sheet, common size income statement analysis, comparative statements in comparative income statement analysis, comparative balance sheet analysis, diagram, graph, trend analysis. There are different techniques, there are different tools in the financial statement analysis. Means comparative statement, common size statement, graphs, trends, diagram. Okay, these are all financial statement analysis. In the next class, we will discuss it. Next one, ratio analysis. There are different ratio. There is also separate chapter for ratio analysis for your syllabus. I give some example. Debtor stock turnover ratio, debtor velocity ratio, current ratio, liquid ratio, solvency ratio. Okay, insolvency ratio, long-term solvency ratio, profitability ratio. Okay, there are different ratio. We discuss the different ratio in the ratio analysis chapter. Fund flow statement. Fund flow statement means what are the changes in the fund from beginning to end of the year. This is also one of the technique. This is also one of the tool of the management accounting. Cash flow statement. This is also one of the technique and tools of management accounting. There is a separate chapter for fund flow statement. There is also a separate chapter for cash flow statement. We discuss the latter. Next one, return on capital employed techniques. Means there are different techniques to calculate the return on capital employed techniques. Next one, based on cost accounting information, marginal costing. Okay, there are different techniques in the marginal costing, profit volume ratio, break-even point. Next one, margin of safety. Okay, how means if the production is increased, how to increase the profit, what is the change in the profit. Okay, can apply the different techniques in marginal costing. Next one, direct or incremental or differential costing. Okay, this is also one of the technique or tools of management accounting. Next one, standard costing. Okay, standard costing means already the management organization applied the standard cost. Okay, what is the cost? What is the cost per material? What is the cost per labor? What is the cost per particular item? Already fixed it, and but you have to compare with in a standard costing technique. Next one, analysis of cost variance. Okay, fixed cost means the actual cost already fixed by the organization. What is the actual cost? You have to compare. Okay, that will be treated as a cost variance. By taking one example, you can understand the cost per pen fixed by the organization is rupees 10, but actually purchased the pen for rupees 12. The cost already fixed by the organization rupees 10, but the actual price of purchased by the organization rupees 12. Means rupees 12 minus 10. What is the cost variance? 2. Okay, this will be treated as a cost variance in terms of material, in terms of labor. Okay, in terms of other expenses, also direct expenses. Next one, tools and techniques of management accounting based on mathematics, operation research, linear programming, network analysis, games and game theory, and simulation theory. Okay, there are different techniques. Tools and techniques of management accounting based on future information, budgeting. Okay, when you want to purchase the new plant, when you want to purchase the new land or new machinery, and that situation you can budget. Okay, which expenses are to be made in the next year. Okay, which incomes will be received by the organization in the next year. We can make the budgeting. And a project approval and evaluation. When you want to start the new product, when you want to launch the new product in the market, and also you can evaluate that product. Okay, whether the project will be approved or not, or rejected, whatever it may be. Okay, the project evaluation. Business forecasting. Okay, what will be the sales after 10 years or 5 years or 3 years, whatever it may be. We can forecast the sales or profit, whatever it may be. Next one, miscellaneous tools. Managerial reporting. What is the sales performance of a particular sales manager? What is the recovery rate of the particular branch? What is the loan amount sanctioned by the particular bank? Means all managerial reporting can be prepared. Next one, integrated auditing. Next one, revaluation accounting. Revaluation accounting means actually what you are shown the assets in the asset side, that is the book value. But the real value of that assets is changed, maybe high or maybe less. Okay, what you are comparing the actual price and the market price, that will be revaluation. Next one, management information system. Okay, there are different tools in management accounting. Okay, till now you have watched this video, you have attended the class online. Thank you one and all.